Hello traders, good week, good Monday, good morning, afternoon, evening. How are you today? And how was your weekend? Very good to hear that. How did you spend your time? It was lazy. It was lazy weekend. I'm good, thank you, Marcy. Thank you very much. It was a wonderful resting time, as always, playing with the boys, the kids. Now we're building them a playground downstairs, the indoor playground. So every time we progress a bit further, they wanna celebrate. So it's kind of great. The weather, well, I would show actually. Can I show here somehow? No, I don't know how to apply the camera here. It's snowy, lot of snow. Beautiful, beautiful white color. Well, at least I enjoy it. I know many don't. That's good, Marcy. That's good. If you have any question regarding the Scorpio, then you know we are here for you. Okay, guys. So let's begin. This is a Monday session. Monday is always our longest session. So the veteran visitors of you know that you should be well equipped with coffee, drinks, energy bars, right? Some let's say lack of distributors, this distractors, sorry. And that's all. Let's begin. So I can see some new names here. Welcome on board. Welcome to our family, guys. Quick reminder how it all begins. Very simple. You go first of all to the members area. Inside the members area, you have the what's up with my microphone here? Now it should be good. Inside the members area, you have the video tour. Watch the video tour, so you start to get slowly familiar with what's going on. What do you have inside the members area? There are a few more features we added to the members area since the time I created the video, but you will get a general idea. Then there are the reports. That's the trading reports. This report is available for you after each session of the live trading room. So once the live trading room is over, me or Jordan, depends on who holds the session, make this report for you, and it is sent right away once it's ready. Okay, so you have two of these. How to deal with the report? Easy. You have this video, right? Watch the video. It explains and details how the report looks like. What do we do inside the report itself? Here in the comments part, you have all the most important webinars to watch in your good time, in your comfortable time, and available time. So you can understand basically what and why and how do we do in the live trading rooms. It doesn't mean that you have to do the same. It just will make it much easier for you to follow the instructions, directions, and setups we discuss about. The idea is very simple. We identify the directions we want to trade during the week according to the higher time frame cycles. So that could be buy, that could be sell, that could be both, or that could be untouchable. It is a buy when the higher time frames, daily and weekly, lined up together. It's a sell when they are lined up together. It's both when they are not lined up together, when we have few of a possible scenarios to be developed. So long term could be one direction, but short term could be different direction. And untouchable means when there are no clear cycles, no clear read on what's going on with the specific pair or instrument, and then it will be mainly neutral. All that is summarized for you here inside the report into subjects, forex, indices, commodities, CFDs, and why the CFD appears here in oil, no idea. We should remove that. And the cryptocurrencies. Okay, so everything is here, and then on the table below you have all summarized for you. What's the cycle plus the screenshot, so you can click on any of the pairs and you would understand how do we do, what we are looking to do, basically in general idea of the cycles. That's the type of the cycle it was. That's the directions we want to do, buy, sell, or both. And here you have the comments. In the comments, everything is explained. Okay? When we are for long term, when we are for short term, etc., etc., etc. When extra screenshots are required, you get them right here, and you just click on it, and it opens for you the screenshots. Sounds good? So that's what we have right here. This report is available for you. Everything is there, and of course, if you have any question after the report about any of the pairs, any of the instruments, any of the setups, there are the Telegram groups for you 24/7. Myself or someone else of the veteran traders, those who are familiar with the subjects, will assist you. The support team is there for you by email. And of course, we have the trader stock inside the members area where you can also load your questions. Okay. Derek, for your question, what are the long term, what the short term? Basically, I analyze weekly and daily, and I define a direction. Okay, long term is everything to join these directions: the daily cycle, the daily trends, or the weekly. Everything below belongs to the short term. Okay, so again, there is no specific definition that short-term trade would go and develop into 2 hours or a day. Everything depends on the market. Sometimes there are periods that long-term targets are reached within a day or two. So everything is in the hands of Mr. Market. All right, so that's the quick update about where we stand and what do we do with the report. Okay, so now let's begin. As I said, this is the longest session. I'm going to go over the report and go over the pairs in their lineup. Sorry, I closed that. Apologize. Let me just reopen that. All right, where is my report? Report. Here we are. But now you cannot see the screen. Huh? Now it's back. Yeah, it's back. Okay, so we will go over the report and cover this pairs. We start with the euro pairs of the euro dollar. Let's make it quick reminder here. We are for the top here. We have the bearish divergence, right? Double cycle, 1, 2, 3, 4. So we would expect a good correction to the downside. Basically, that's according to the daily, to the weekly cycle. In order for the weekly cycle to be relevant and correct, the daily cycle has to end. So basically, we must have false breaks on a daily chart or the 4-hour chart. Do we have false break right here on the top? No, we don't. Do we have false breaks right here on the 4-hour chart? The answer is yes, we do. And they are far away from each other. That was the first, that's the second, right? But there is also the alternative, and this alternative is called a triple cycle or special cycle. Now, since the weekly and the daily cycles are involved, we can find out the entries on the 4-hour chart or the 1-hour chart. In that case, this is the special cycle that we are talking about. So we can start to go and look to trade against the daily, and while we are against the daily, the weekly might go and actually go and develop. This is a special cycle, so what we expect here, that's a correction to the upside. So for the short term, the euro-dollar pressure is still bullish, right? Little bit. Up until where? Well, we would expect, we are in the corrective cycle right now, right? So we can expect the 38.2 or the 50%. from there, or a range. So basically we have two waves, right? That's a corrective cycle or a range. That's the only options we have for corrective cycles. Two waves or range. No other options. Is it possible for range here? Yeah. Falls back on the bottom, falls back on the top. That's a great structure for the range. So it could bounce from here, go down, up again, up again. And every time we are on the up, we can start looking for possible sells. Right? So that's for the corrective cycles. Now, once we have it, we can start looking for the next sells. So far, simple. And now comes the question, what if the weekly cycle isn't over yet? And can we continue higher? And I want to explain you why yes. I know the entire world is after shorts the euro dollars, which makes sense and which is very correct. And if you remember, we were talking about the euro dollar sales from around the zone of 124, 125, which is exactly where we got it. We were waiting for that. But I want to explain you why there is a chance that we are going higher. And this is basically all happening from the from the monthly cycle. If this is double cycle, we are right on the 38.2. If this is a triple cycle, which is broken here into bigger waves, then we are into possible 50%. And if this is all going for a duplication, that simply means that there is a chance for much higher level. I'm talking about 131 or 133. Yes, it sounds crazy as for now. Everything you say would be 100% correct, but it's doable. And there is a chance we are going to continue higher, or at least dance here for a while before we make any decision. Okay, that's definitely a possibility. Why I say that? Because we have to remember, when we have a possibility for the higher time frames to continue on the same direction, we have to be very, very careful and trade the risk accordingly, set our risk accordingly. And why do I show it on weekly? Because I want to remind you that on the daily we don't have false breaks. On the 4 hour we have two false breaks, but we have no lower lows, so no convergence yet. And we don't have triple cycle down on the 4 hour chart as well. So there is a possible scenario that was a correction that is finished, is over. This is a bullish divergence, and we're slowly going to climb higher. This is a possibility. And this is exactly why it's so important to remember. If we go for sells here against the daily cycle currently, not weekly, because the weekly is not ready for a finish, as I just showed, right? So what has to be done here is to get this double wave, make sure they have a divergence, and then and only then start looking for possible sells with the breakouts of the trend line, on the last trend line to be created. Then and only then we can go and make a sell. If that doesn't happen, the pressure, believe it or not, still remains bullish. Okay? Very important to have this read, guys, and to simplify that for actions. So it's long as it's the second leg is creating, it will become short only when we have the trend line broken. Okay, remember that. Next, Mohammed. No, Mohammed, the Scorpio is currently not available for one reason. There is a problem with the marketing and the production company, which we still cannot solve, and that's the only reason, unfortunately, why currently it is unavailable. If it will be, I promise I will let you know. Okay, as for now, unfortunately, and trust me, it's set for me as well, because the system is amazing, and that's all. It's set for me as well. So that's for the euro dollar. We continue further. The next pair on the list will be the euro versus the pound. Now this pair, from my point of view, my personal point of view, is one of the best opportunities forming. Why? According to the weekly cycle, we have had sexy triple cycle. We had a bearish divergence, and that simply looks amazing, isn't it? So basically, the say here is simple: look to sell rallies. There is still gap to be closed around the zone of 08150 from the Brexit period. You remember the celebration we've had in 2016, right, guys? And that means look for sales. Now, on a daily chart, what do we have? We have kind of a range. This range is developing into something like this. You can start naming them patterns, triangle, schmiangle, whatever you want. Seriously, the patterns are classical, but we don't trade the patterns because the name, it doesn't matter. That's what I'm trying to say. The name doesn't matter how you name it. The most important, what do you do inside it? And what do we have inside that? That's the action zones, 1 and then slightly higher. And we have the levels. Note, we have an amazing level forming us right there. Here we are next to the action area, right? This is a duplication area. See that? And that all could become a triple cycle. Maybe even ascending cycle, right? Ascending, going higher. So Euro pound currently on the short term is still holding its bullish correction to the upside because it did not have any good signs for sales yet, just yet, despite the crash on the previous Friday or Thursday. And that's all. So we currently have no reasons for sales yet. So I expect it to go up to here, and from this area, with the next divergence to be developed and the legs to be developed, we will start looking for the sells. Euro pound for short term is still on a rally, still on the upside. For the long terms, according to the weekly cycle, we would be only after sells. Our invalidation would be here. Invalidation means if this zone is reached, the plan of the direction or of the cycle is irrelevant. As simple as that. So Euro pound short term is still to the upside, long term only to the downside. Questions? Any questions as for now, guys, about the Euro pound? Beautiful. Euro yen is our next one on the list. Oh, it is, Mohammed. Euro in general is very tricky, and it's tricky for one reason, basically. The entire world of the retail trading mainly wants to go sell, which is logical. Why would the euro go so high, right? I don't think it has even the fundamental reason, to be honest. Yes, the economy in some places is improving slowly, very slowly, maybe even too slowly. And they did not increase any of the rates, while the dollar did increase. They increased a few times in a row in the US, and still the euro is climbing, right? So that's where it becomes tricky, and yet we trade facts, right? And the facts are, for some pairs clearer, for some not. Very important to remember that. And that's why I showed the euro dollar, for example, as a classical example that don't waste your time if it's not clear. All right, so what do we have on the euro yen? This is basically ideal. 161.8 Fibonacci extension. Right? Well, I was expecting that to try and spike above that to 140, but the market decided differently. In order to finish the weekly cycle, we should have false breaks and convergence on a daily or the 4-hour. Do we have the false breaks on the 4-hour on the daily chart? This is a false break followed by a bearish divergence. This is the fake breakout. And we have lower lows on the MACD. Do we have the confirmation for the sells? Yes. 100% yes. So Euro Yen for longer term is sell. This is the invalidation, which means we want to see the rallies and we want to sell them. So Euro Yen for long term is a sell. For the short term, we had on the daily time frame, we had triple descending cycle. First leg is the biggest, second leg is shorter, last leg is shortest. The divergence of the moving averages, RSI contributed its own view, and now we are on the short term pullback. The pullback happened right here from the trend line, right here from the action zone, right here from the psychological zone of 138. Two waves up are expected to here or slightly higher, where from we would be after the sells. Simple. Once we get there, we should start looking for the sells. The best way to do that would be, of course, to get the confirmation by the break of the trend line. So we climb higher, right? Break of the trend line, and here we are, rock on. What are the warning signs for the rallying correction? We put the Fibonacci retrace on the entire move. If we cross through the Fibonacci retraces level, just one shot up, that's a warning sign. Sometimes it happens, right? So that's why break of this trend line is so important, right? If it just shoot up through all of these levels, that's a say from Mr. Market. Hey, dear trader, it simply can't be traded yet. Okay? Pay attention to that, guys, because sometimes it happens. We saw that on where was it? On the pound Aussie previous week, right? Sometimes it happens, and with all the wish we might have for a specific action, that's the value of patience. Okay? So what time frames are tradable here? According to weekly, we should trade the daily or the 4-hour chart, which means the double cycle could be on the 4-hour chart, followed by bearish hit and divergence. Since the daily cycle is also involved by itself with this triple, we can go and also make an action on the 1-hour chart. In order to join the weekly, the two-wave correction has to happen on the 4-hour chart, which it currently does. It starts to develop. Once it has on the 4-hour chart, you can drop lower to the 1-hour chart and trade it. Okay? So basically, if you would get here a double wave and a breakout, you should not trade it because the 4-hour chart did not provide you the two waves up. Right? So you want to see the bigger picture on the 4-hour chart, and then you can go into 1-hour chart and sell this, the last trend line. Okay? But the 4-hour must be there, and it's currently creating. Okay, Mohammed, how can we enjoy the correction? That's a wonderful question, and that's many times this question raised up. So how can we enjoy these rallies up, right? So first of all, you identify the short-term correction once they are acceptable. The reason they are acceptable right now is, as I showed before, because of the cycle developed, right? This triple descending cycle and the bullish divergence on this lower time frame. Now, ask yourself the question, do you have the reasons for the buys? You have here a triple spot false break. You have here a horizontal false break. Do you have the reasons for the buys? If the answer is yes, you drop to lower time frames. Once you get there, 2 waves corrections followed by bullish divergence, you can go and trade it. Okay, so for example, this. Right? Of course, you have to pay attention here to the 2 candles rule and the divergence, right? All these little things. But here is your idea. That's how. First of all, you identify where the correction is acceptable from. Once it's triggered, right? And it's triggered when you have the divergence, end of cycle, false breaks, right? In that case, 1 horizontal, actually 2 horizontals, and also trend line false break, right? The divergence is there, the moving averages, of course, right? So that's how you build yourself the picture. And the short-term longs invalidation is always the last low. Okay, that's all. Good. So to break even, yeah, that's a good question. When do we move to break even? Normally on the intraday, I move after 1-to-1 risk reward, or once start to get divergences against me. So when you get a divergence against you, you move stop loss to break even. If you need to make some money to in order to improve your total performance during the week, then you cash out. The idea of intraday trading is a bit different, because the intraday trading, it's a bit less for the statistics, more for the performance. We just need to make more cash. That's all. On longer term, you have the entire power of the statistics, the level, the risk rewards are better, etc., etc. Right? On the short term, it's mainly more for performance. You have your money, boom, take it. Okay? But at least 1-to-1 risk reward in order still to keep yourself positive in the growth. Okay, the scale on the upside. So that's for the euro yen, guys. Any questions here? Yes, no, maybe. Perfecto. Then we have the euro versus the kiwi, a pair that we were in the bearish direction on the previous week, and this week it is updated and upgraded maybe to both, for one reason. Why? According to, just want to go and explain it again here. According to the monthly chart, that's what we have. Boom, 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 triple descending cycle. So we had a convergence that could be also a range, right? We could go for a double cycle here or revisit top of the range again, but there is enough reason for the buys. That's according to the monthly, the longest variation possible. Now, here, it was on a previous year, that's where we started to go long, right here. The beauty beginning of 2017. The rally was simply unbelievably amazing. Now we got the rally. But what we got on the rally is this triple cycle. The divergence is there. So according to the weekly, we can get the correction down. So already a controversial sign that weekly is against the monthly. What do we have on a daily? On a daily, we had a cycle by itself here. And a special cycle here. Right? Now, if that's not enough, what we had besides that on the 4-hour chart was the triple cycle, special cycle, triple cycle down here, and now it's a triple cycle up here. Boom! Again, mixed signals, right? So we can easily see that flying, and on the same time, we can also go and see that going down according to the weekly cycle corrections. Which means both directions are completely acceptable for trading. And we should go with the lower time frames, like 4 hour, 1 hour, momentum and directions. Momentum and the direction on such periods are gained with the divergences. Once you have the bearish divergence, the pressure is bearish. Once there's a bullish divergence, the pressure is bullish. Okay? That's how the short-term time frame design, because we don't have any longer-term cycles to trade with. And once you have the direction by the divergence, you find yourself the cycle right then. Okay? Clear? So for example, if you have a bullish hidden divergence right here on the trend line, and this is your cycle, your short-term cycle, this is where your bullish momentum starts from on the short term. Okay? That's the idea here. Because according to the week, exactly, because according to the weekly, we have both scenarios possible. Which of them is going to win? Only time will tell. Let's say I would not be surprised if we are going to see another hike, another rally, another top. I would even give for that a bit more of possibilities. Okay, so that's why the Euro Kiwi, a pair that we were looking to trade and sell at this stage here, 1, 2, 3, 1, 2. That's where we started looking ourselves, developing now different scenario. And that's why I always say, guys, and you know that, don't marry your position or your idea. Which means don't force the market to follow as you wanted. If scenario number 1 does not develop in the way you want, you should adjust, not the market. Don't try to convince the market that you are right, because the market can buy it. The market doesn't care what we think. We should be care what the market does, right? And this is the importance of the read. We have a plan, but sometimes it has to be adjusted, and that's a classical example for that. We can keep fighting it and say, no, but it has to, no, but it has to, no, but it has to. No, it doesn't. The market will do what the market wants to do. If we keep fighting that, we will lose the opportunities. As simple as that. Okay? So for the Euro Kiwi, both directions are tradable according to the current market conditions. And more than that, I would say, personally, I prefer the buys. Just because of the daily, of the monthly, just because of the fact that weekly still have the room to the top of the range, I would prefer to the upside, looking for the buys. So 2 waves drop down and looking for the possible buys. That's my point of view. Okay. Nuno, can we have a rising range on the 4-hour chart? I guess you mean this one, right? Yeah, of course. That's a channel, right? Trading tunnels is very popular trading style by itself. Very popular. Many traders love that, respect that. Many traders develop the strategies according to that. The idea is pretty simple. You need spots on the top, spots on the bottom. The distances should be pretty much equal. You mark yourself 10% to the upside, 10% to the downside for action levels. And basically what you want to do is to be able to mark the opposite pullbacks as channels by themselves. Something like that. And then the validity of that is very, very strong and powerful. So, Nuno, if you meant this, I developed it a bit further, sorry. The answer is yes, it is. It's a rallying scenario, bullish tunnel, beautiful setups. It's pretty beautiful. Yep. All right. Great, let's continue, guys. The next one on the list, euro versus the franc. The plan is exactly the same. We are still to the downside for the longer run. That was our target. Both of them on the first view reached. And the next targets would be according to the huge cycle we have there, which means the zone of 114, 113 may be slightly lower. But that's for the longer run. On the shorter run, we have here the cycle of this. It was a bullish regular divergence, and it turned to be a bearish fake convergence, which in simple words means what? That we want to see short-term corrections. So euro franc, short-term buys, long-term still sells, with invalidation for the long-term here, and the invalidations for the short-term are here. Okay, pretty simple here. In that case, the view is very, very specific, clear, and pretty much obvious, I would say. Any questions here? Again, according to weekly and daily, we are to the downside still. According to 4 hour, 1 hour, we have the move down, which now seems finished, according to the cycle as develops with the divergence and convergence on play. And that's where the short term and the long term comes into the game. Any questions here, guys? About the euro franc, please. Great. So the next pair on the list is the euro versus the Canadian. Here we are. The euro versus the CAD. So what do we have here? According to the monthly, let's do the monthly. We are in a huge range, right? Currently, the momentum is pretty serious to the upside. No changes, nothing. It's bullish, right? At this stage being. According to the weekly, interesting. And also we have here kind of the range, right? According to the daily, and here it starts to be interesting, we are on the around the top of the range. So we are on a critical classical zone, right? To look for sales. How do we know if the weekly cycle is over? We go to lower time frame, daily or 4 hour chart, and we start to ask ourselves the questions. Do we have false breaks on a daily chart? Yes or no? Let me enlarge it a bit here, guys, because, well, let me be a bit more specific. Is that a false break? Yes or no? Who can tell me the answer here? I have 1 no, 2 no's, 3 no's, 4 no's. Who else want to try? Perfect. So everyone says no. The answer is, of course, yes. No, just joking, just joking. Of course, the answer is no. That's not a false break, even though it looks like the last 2 candles rule in the rally are here and here. Since the low was not broken, there is no correction. The last 2 candles on this rally are this and this. Since this low was not broken, there is no correction. Which means we're still in the bullish momentum with all the wishes on earth to go and to sell. Do we have false breaks on the 4 hour chart? Currently don't. We had false breaks here. We had false break here. We never got lower lows. Never. If we don't get lower lows, the momentum is still bullish. As simple as that. and we can beg into the god of trading world. But. Too many buts. But the level is so good, everything is so good, but there is no reason still to make any kind of sales. Any kind, guys. That's very, very important. I want to understand because I saw some questions on the previous week. So can we go and sell here? No, you can't. Why? Just because it's an empty spike, so what? Yes, there is a chance it will do something like that. Do you really want to risk yourself in that scenario? We want to trade the facts. That could be yes or no. You want to trade facts, not just a possibility. You want to trade a setup, a formed setup, a specific market condition. Since we don't have it, the EuroCAD still remains bullish. Very simple. So does it have the levels? Well, yeah, on the 4-hour chart, there is this cycle, for example, and wow, we are on 61.8, so what? So could it do any kind of short-term corrections like that? Yes, it could. So what? Again, do you really want to try and deal with that? To go against the weekly, against the daily, and try to trade the intraday? You can. But then you have to be very specific. How? If this is an ending cycle on the 4-hour chart, which is not, because there is no divergence on that place, okay, fake convergence, which was already over. But if you do want to do anything like that, what you need to do is 1, 2, 3, 1, 2, which we currently don't have. So this is the only 1, 2 developing. And then and only then go with the breakout. That's for the short term. None of that still happened. If the short term doesn't happen, what is still in play? The long term. And the direction here is still remain bullish. You see that, guys? And it's simple. You can find tons of reasons why to sell already on all this period here. And don't be surprised. You know what this spike is? Stop loss. From all those that already sold this trend line, for example, which is not correct, but sold this trend line. That's exactly what it is. That's stop losses catchers. Whoop. Let's get them all. And they erased. You think it's surprising, but it's not. They erased this high. They erased this high. They erased this high. No, it's not broker catch. The broker has nothing to do with that. That's markets. I'll call them algorithms, call them the big fishes, call them whatever you want. The big money, the big monkey, yeah. That's the sharks. That's the big guys. So that's the place, guys, and that's where it happened. That's why it happens. When traders are into rush to trade into wrong direction, it's easier to catch their stop loss. Because there is no big money involved anyway in the direction that the retail traders want, so no problem, let's push some. Think about it. If there is a position of just 50 millions, for example, or 100 millions sells, how easy is that for the big fish to come and boom, set up some short-term expiration option here and catch everything on the way? Just think about it, how easy it is. It is super easy when you have the condition when there is no money flow, when the big money is not involved. When the big money is involved, you would almost never see anything like that. Almost never. Well, sometimes still, fundamental surprises, right? But that happens exactly on the periods where the big money flow is not in play, and that's why that's basically what I wanted to today's speciality in the lesson in today's meeting. Exactly this, to show you this situation, guys. It happens. You need to understand where it happens and why it happens. right? And previous week I saw so many traders contacting me and Vlad, I want to sell. Why? Me too. I also want to sell, but why? Because, but, and then I challenge back with the same question. Really? No problem. Show me the triple cycle down. Show me the double cycle up. Show me the trend line. Show me the correction. Show me everything. And then comes the there is no reason. No one can prove it. So there is just the wish and a bit of rushing into an action. That's what I call rushing into an action. Okay, guys? So this is very, very important lesson, which I wanted to show you today. Thank you to Mr. Market for creating that for us on Friday. I wanted to show you that how it happens, and it happens. And it happens on the places where the big money flow is not where the traders think it is. That's called the read of the cycles. And last week I've been asked a few times, why do we need the cycles for? That's a great question, seriously. Like, why do we need the cycles? It's so complicated and everything. 100% yes. But that's the money flow. You want to swim with the big money, it's the right decision. There is a great saying called money likes money. And whoever doesn't know to create money hates it. Because the money goes only to the money, right? There is a reason why it happens. That this money basically design the direction. Take it or leave it. Like it or dislike it, it's completely up to you. But this is the reality. And you have two options: fight it or accept it. In trading is exactly the same. Money designs the direction. The big money designs the direction, not the small money. Not me, not you, not everyone here in the room. And I consider myself very, 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 very tiny fish in this ocean. The only way to survive in this ocean is not to swim against the sharks. If all the sharks swim north, for example, we should swim also north, not south. Right? And there's a great joke about it, about this situation going against the flow. A wife calls her husband, "Honey, where are you?" "I'm on the way back." "Why?" "Because on the radio they say there is one crazy guy going against all the other cars in the road." And he answers, "Only one? They all are the crazy here." So that's the same condition here. Never try to be this one to go against everything. Okay, read the longer term cycles is extremely valuable, and this will save you a lot of bad decisions. EuroCAD was a classical situation for that. I wanted to say that. So our direction is still to the upside, which means we don't blindly buy. Oh, so no sells, okay, let's buy. No, we need the setups. Setup means two waves to the downside and then a trendline breakout. The same principle. Two waves to the downside and a trendline breakout. That's the same principle we always keep talking about. Okay? Perfecto. Euro versus the Aussie. Any questions, by the way, about this one, guys? Any questions here about any of what I just discussed on the EuroCAD? Perfect. Euro Aussie. Now let's see what do we have on the Euro Aussie. Let's start again from the monthly, and for one reason. Look at this one. That's a straight leg down, right? If we go to weekly, we break it into triple descending cycle. You can see it also on the monthly, but it's a bit trickier here. This is 1, this is 2, because it crossed a new low and a new high parallel. 3 and 4. Triple descending cycle, which means after that we are for correction, double wave correction. We got it. Game over. From here, everything could happen. 1, 2, or 1, 2, 1, boom. 100% open doors for both actions, both possibilities. We had one false break on the top, one false break on the bottoms, though, which makes it what? To be a range. Exactly. Since we have this cycle fixed, corrected, this should be at top of the range, which means we should start looking for the cells. Weekly cycle suggests us the same exactly. We are on the levels. Do we have a reason? We have the level. Do we have a confirmation? Do we have divergence? Yes. Can we go for sell? Hold on. Do we have the setup? How do we identify setup? How do we identify setup on the weekly chart? We drop lower to the daily chart and we start asking ourselves a question. Do we have two false breaks and convergence? And the answer here would be no. Okay, if the answer here is no, we go to the 4-hour chart and we ask ourselves the question, do we have two false breaks here and convergence? And the answer here is exactly no. We have one false break, right? We have one false break. That's a good question, Nuno. Why do we need two false breaks and not one? One we need when we go with the direction. Two we need when we go against direction. Why? Because that's normally how many times it takes to clear all the stop losses. Normally it's two, sometimes it's a bit more, 3 or 4. But when we go against the higher time frame direction, you want to give the big guys to clear the entire zones, completely clear it, and then you want to join. So 2 and the convergence is required. Okay. What is the other option if we don't have two fallback and convergence? 3 waves down, right? 3 waves down to develop the new momentum. Do we have it here? Yes or no? Beautiful. No, we don't have it. Exactly. Therefore, do we have a reason for long-term sell already? Muhammad, that's very good saying. We have a double top. Yes, well, double top is not a false break. Okay, so no, we don't have a reason here for long-term sells yet. As simple as that, which means once we get 2 waves to the downside on the 4-hour chart, we can start looking for the buys. Like here, we got 1, 2. We can start looking for the buys, right? In that case, what do? We drop to lower time frame and we start looking for the entries. The entry could be right on the trend line here, or the entry could be on the lower time frames and allow us to enjoy the rally. Short term, what about the short term? Since the weekly is not for sales yet, what about the short term, daily? Does this one have cycles by itself? Well, yes, it has the triple cycle here, which is also going and losing its momentum currently. The question is, now, do we have two false breaks on the 4-hour or the 1-hour? Or on 4-hour, we saw we don't. So let's see on the 1-hour. We need two false breaks on convergence or triple cycle down. Do we have two false breaks on the 1-hour chart? No. Do we have a triple cycle down on the 1-hour chart? The answer again is no. Not yet. Not yet. So if you get 1, 2, 3, and then 1, 2, you can start looking for the cells. But currently, it's not. So what you did, for example, Muhammad, is this. You saw some kind of cycle here. This is the 1-hour chart. And it looks amazing, right? And you go and you make your attack here somewhere. Top or trendline breakout or whatever it is, right? So can that work out? Yes. But is that correct? No. Because many times, if you sell here the top of the range and that in that places, then you give yourself the chances. But that means you need to go and cash out when you have these signs. And here you got 2 waves, bullish divergence. So at least you move stop loss to break even. You don't want to let it go. right? You don't want to let it go. Beautiful. Okay, so that makes sense. And again, I always say that yes, that's what it called the intraday, the complete intraday. You are here at the end of, at the end of a special cycle, which means you are going to get back to here, or you are going to get a range. But this is only 1 hour chart, not 4 hour, not daily, still ready. That's only the 1 hour chart. You want to play with that, no problem, but just remember, this is 1 hour chart. You don't want to bet, will that start and affect the 4 hour chart? Remember, we want to trade facts. And the fact is that currently you have this scenario only and only on the 1 hour chart. There is nothing wrong in reading the 1 hour chart and try to go and make this 15 minutes trend line, for example, and look for the breakout here. No problem. But just remember where you make your money, or at least you are moving to break even. Okay? And remember, 1 hour chart is not 4 hour, is not a daily, so you can't make your long-term decisions according to that. So the bottom line, Euro versus the Aussie is still bullish, which means, in other simple words, every 2 waves on the daily or the 4 hour chart, we are looking for the buys. Okay, simply because we have yet no reasons for the sells. No 3 waves down, no false breaks and convergence, nothing like that. The best places for such buys would be, of course, take the last leg and get them around the 38.2 and 50. And again, for those who do want to trade these retraces, like Muhammad just asked and showed, then you need to drop lower. And you make your decisions according to the lower time frame. But just remember, this is the lower time frame. Many times we try to catch the big fish from 15 minutes entry and expect to be a move from the weekly chart. That's not how it works. Right? It's not how it works. Okay? Great. No, Euro NOK I'm not covering because we don't trade it, so I don't want to do that. If you want private, Muhammad, no problem, in the Telegram, okay? Just want to go over the pairs we're trading. So we are done here with the Euros. Any questions, guys, about this? Most of them, as you can see, provide us short-term direction and long-term direction. Only few provide us very clear decisions for the longer run. Most of them still don't, which means we don't force. It's the most important thing here. Don't force. Perfect. So let's go to the pound dollars. To the to the pound. Sorry, pound dollar. What do we have here? According to long-term monthly cycle, we still have the room for 154, 155. And if I have to bet, I assume it will be reached somewhere by 2025 or something like that. So for those of you who are for very long term, when you get yourself a drop, start buying. There's a good chance we are going there. But that's for some pension program. On lower time frames, and it's funny, but weekly suddenly is lower, we have reached the 38.2, the zone of 140. We're almost reached the 50%. We are definitely in critical area because we've had a regular divergence which turned to be a fake convergence. 1 plus 1 normally equals 2. If we drop to the daily chart, what do we figure out here? That we have this cycle here. You can break it a bit bigger into triple, it doesn't matter how. The extreme was dancing on this place. There was a histogram divergence here. Again, That's very clear. And now we have the question. Do we have the reasons on a daily or the 4 hour to go against the weekly? In order to go against the weekly, what do we need? Two false breaks on daily or the 4 hour chart. One false break and the second one clearance. Yeah, that's what we said before. To clear the levels. Do we have false break on a daily chart? No. Do we have false break on the 4 hour chart? No. The alternative for that is what? Triple cycle down. Beautiful. Do we have a triple cycle down here? Yes or no? Who can answer? Who can help me out here, guys? Save me. Beautiful. We have a triple cycle here. Do we have a divergence to end this cycle? Oh yeah. Oh yeah. Sexy. Which means very soon, pound dollar, we expect it to make a correction. That's our zone. So basically, the closer we get to the 161.8, and there is a good chance we're going to see another push here. But the sooner we get it, we get closer, the better the buys that should be for the pound. Which means we are looking from this area for two waves correction or at least for a range, right? Two waves correction or at least for a range before we consider the sells. So pound dollar is for long-term sells, but for the short term is suitable to start looking for the buys. Let's see if we already have a reason for buys here. Do we have false breaks here and convergence on the lower time frame? Not yet. Do we have any triple wave up followed by two waves down? Not yet. Right? Let's go to the 50 minutes because this is where it could be interesting. Do we have any triple here? 1 and 2 and 3. So yes, no? Of course yes. Do we have double here? Yes, we are. So this is our trend line. This is the entry. This is the stop loss. 1 to 1, we should run away and break even here. Now ask yourself the question. Does the risk reward in such cases worth it? If the answer is yes, you have yourself a good trade. If the answer is no, you don't have yourself a good trade. So the only action we have here is again suitable on the 15 minutes. Do we have anything on the 1 hour chart? Not yet. Okay, and that's all. That's how you make your conclusions. That's how you make your decisions. Easy. And the only reason it's easy is because we follow the steps. What do we have on the weekly? What do we have on the daily? What do we have on the 4 hour? And from this moment, what do we do? If all lined up into the same direction, that's all. If we have to split the time frame short-term and long-term directions, then you build yourself this double plan. Short-term, this has to happen in order to buy. Long-term, this has to happen in order to sell. And that's all. And I want to repeat it here, guys. If we want to join the weekly sales, we need to get the 4 hour chart to waves and get them broken for a sell. If we want to trade the intraday buys, we go to the 1 hour chart and we're looking for the buy signals there, buy setups. If we want to do it on the 15 minutes, we can do it on the 15 minutes. But that's all. This is exactly what we do. Okay? This is exactly what we do. This is exactly how we make our decisions. And the answer there is simple. If you have an answer. Sometimes you build all the lines and everything you want and there is simply nothing. The market still gives you nothing. In that case, don't trade. Very simple. Okay? That's for the pound dollar. Short term, we accept the rallies. And yes, you saw the level. This is where the 161.8 comes in, right? So there is a good chance we are going to clear the zone here and start the rally. This trend line also goes, me and trend lines with a free hand, something crazy here. Okay? There is a good chance we are going to dance here, to make all the crazy zigzags, back force, back force, back force, back force, before we actually start the rally. Why? Because we have all the reasons for that. The level is a bit lower, right? No real false breaks on the 1 hour and convergence, no real triple and anything like that. So kind of very, very tricky here, right? That's all. So for those of you who want to trade the short term, 1 hour, 15 minutes, those who want to deal with 30 minutes, no problem, but that's the same. Like, that's why I don't see any reason for that. Okay, that's all. And remember, there is a good chance we're going to clear this zone and start the rally. That's for the pound dollar. Pound franc, bearish it was, bearish it is for the longer run for us. Basically, that's what we wanted to see. And believe it or not, we're almost there. 50% of the triple cycle. That's what we wanted to see. And it was pretty much straight. Took several days. But here we are, dancing around the 50% for the short term. For the long term, we have the double cycle 38.2 and also almost reached. So yes, it still has the room. It still has the potential for the longer view. There are no reasons to switch it for the longer view. No higher highs yet, nothing. So the pound franc, basically, we still want to sell the rallies. So rallies like here. Sell, rallies, sell, rallies, sell. These action zones represent the levels where we should get it and look for the sells. Where do we do that? On the 4 hour or the 1 hour. The 4 hour because we are with the weekly double cycle correction. The 1 hour is because we are with the daily triple cycle correction. On a daily, we also had a convergence here, which gave us the boost to the downside, and that's why we are looking to continue sells with 4 hour or the 1 hour. Okay, when we get the trend line, we mark the last trend lines, and that's what we trade. That was one of the trend lines. That's the second trend line that we've had broken. And currently, there was nothing more. This wasn't the trend line. And this is not a trend line because we have no two candles rules broken here. What's up here? Here. So that's not a trend line here currently. So for pound franc was and remains bearish. Can we get short-term rallies? Yes. In that case, I don't think they're too much worth it to trade it even on the 1 hour chart because of the two candles I just showed you. So again, what we can do here is start to force it a bit into the 15 minutes. And that means triple here, double here, and the last trend line. That's an opportunity, for example. Okay, intraday opportunity. That's all. That's the only things we can actually do here. Because anything else is not clear. So only 15 minutes could be in a corrective mode for action here with this trend line. The last trend line, right? With the divergence. Here we are. Bullish divergence, last trend line. This is the only possibility. On the 4 hour, 1 hour, still nothing. That's why it remains bearish in the idea of sell rallies. Still. And the targets, the final target could be still the zone of 128 here. Okay. Pound yen. After the convergence we got here, this pair is bearish. What we are looking to cash out is basically the 50%, which is the 146, 147 zone. First level was reached. That's the 38.2, which means we're looking to join the weekly cycle here, right? Weekly and daily cycles. So the 4 hour chart has to make us two waves up, and then we can trade it on the 1 hour chart as well. This would be the perfect zones. 1, 2. The zone of 152, slightly lower, and the 152, 80, 153. That would be the two classical, beautiful areas to look for possible sales continuation. So bearish it is. We want to sell the rallies. Pound versus the Canadian invalidated the previous high by breaking above it, and right now I myself see nothing. We are on the top of the triple and simply nothing clear here. Top of the weekly range, but nothing. No convergences, no new lows, no three waves down, currently nothing. Therefore, pound CAD is completely for both and only for short-term direction, and with the last momentum. You can see yourself there is currently no momentum, which means the big money is not playing inside. So pound CAD is acceptable for both 100%, but only for the short term. Only for the short term, until the picture would get clearer a bit. Pound versus the Aussie, a pair that we have been long on the previous week with the breakout of this trend line, reached the 180, the psychological 180, and blocked basically. Triple descending cycle, long-term top, bearish divergence. So we got ourselves the beautiful rally, we got ourselves the beautiful bounce. What's next? According to the weekly cycle, we still have the triple, which might go and get corrective. On the same time, according to weekly, this was the double cycle, so the levels are still suggesting a bit higher. So according to weekly, we can see that going to both. According to daily, we had a triple, right? Now a false break. And we don't yet have lower lows on a daily. And we drop lower to the 4-hour chart and we ask ourselves the questions, what do we do there? And here we got the descending triple cycle. The false break is there, but we don't yet have lower lows. Okay, so if we break below this low, pound Aussie would become short-term sells, which means we can look to short-term sell rallies. But for the longer term, not daily, not 4-hour yet, provided us nothing, finishing, clearing. So the long term still provides nothing. So pound Aussie would become available for sell short term if we break below this low, which we currently don't. As long as it doesn't, it is still, believe it or not, still both with a bullish momentum. And the trend line is currently in play, and even that happens, right? So again, the momentum still did not change, and we don't want to force it to change before it's ready. Break below this low should change it a bit, but currently it's not. So pound Aussie is still suitable for both, and yet the momentum is still bullish on the short term. Okay, and pound Kiwi, well, now it starts to be interesting. I was very neutral on the previous week, but my view here is the same. This is the monthly chart. I expect here a monster. I said it many times. I expect here something massive. So every drop, I expect a fly. Of course, no, that's according to the monthly. Weekly, we have triple ascending cycle. 1, 2, boom, 3. Which means every drop down, we're going for buys. What kind of corrections we accept? 2 waves or range, right? So the daily chart has to provide us 2 waves down or a range. Do we have 2 waves down? No. Do we have a range? Yes. Which means around the bottom of the range we should start looking for buys. Exactly. Beautiful. How? And here comes the part of the decision. How do we trade it? So we want it on the bottom of the range, which means we want to see some kind of legs inside. Right? That would be the ideal area, the 188. According to daily, we have no cycles yet. According to 4-hour, we have no cycles yet, because that was a format of lower lows, lower highs, but now we have higher highs, which means nothing at this stage. But if we have it here, the zone of 188, 187, or slightly lower, we are going to look for massive buys. So pound Kiwi, still no action, still neutral, still non-untouchable, but start to prepare yourself, guys, because if we have it here, we are going to start looking for good buys. Not a good buy, but good reasons for buys, right? So that's a great place. Start paying attention to it, and that's a good question. That's a good question, John. Why not to sell? And who can tell me here? Because we have no reasons for sales. What kind of reason we have for sell here? I don't see any reason for the short. Well, for short term we can deal with sales. Yes, mainly because of this. Look, because the daily chart provided this double cycle, right, and this triple. So yes, we can do something to here, definitely. Now let's go to the lower time frame and ask ourselves the question: do we have the reasons for sales here? Which means 2 waves up to go for sell, and the answer would be no. You have it nowhere. There was no divergence on these 2 waves. There is no divergence, and that's all. That's where it's over. So there is no action for the short term as well, and that's why I say that currently pound Kiwi is untouchable. You see, guys, how we make the decisions? Yes, of course we can start and force it, like, but what if it does this? What if it does that? What? We can convince ourselves in tons of different ways. But there should be a clear answer. You have a reason to act or not. In that case, the answer is clear. No. And of course we can always find a reason. Always. Like, but this is a double top or top of the range, so I go to sell here. Of course it could work, but on this, maybe even easier than to work, it could fail. If you have no reasons, you rely on luck. If you rely on luck, good luck. That's all. Okay, remember that. Very simple. If you rely on facts, you improve yourself. The chances, it's still not a guarantee it's going to work, but it is a guarantee that your starting point is the best. And if your starting point is the best, then you give yourself better chances to end up into profits. Very simple. So that's all for the pound pairs. Pound Kiwi currently still bearish, but start to pay attention to, guys. Let's continue. The next pairs on the list, Pacifics. Australian dollar, a pair that we have been selling and selling and selling all entire week, previous week. But according to the monthly chart, we still expect to get it around the 084, the correction of the double cycle. According to the weekly, that's where it becomes a bit tricky, right, guys? Because we have 1, 2, 3, which basically means that we can get a correction in 2 waves or a range before we deal again with the buys. Right? That's for the longer term. We also have the trend line, of course, right? So the closer we get, the better the buy should be. Great. So that means if we want to join the weekly, we need 2 waves on the daily time frame in order to go buys. Do we have 2 waves down on the daily time frame to go and look for buys? No, not yet. Not yet. Do we have 2 waves on the 4-hour chart to go and make the buys? Well, here is the answer. And the answer here would be, oh yeah, we have. So, Aussie dollar acceptable for short-term retraces around all this zone, which means we can see this. But for the longer term, we still have no reasons for the for a clear buy. And the reason for that is we don't yet have, well, we do have the 2 waves on the 4-hour chart, right? But none of them created a false break. None of them provided a convergence for higher highs, and none of them gave us yet 3 up, 2 down breakout. Which means the longer term still under a question. But for the short term, there are no questions. Which means every 2 waves down, even if they create for us a new low, would still be breakable and tradable. So Aussie dollar looking for short-term buys. Okay, Costas, how long take to upload the recordings? It takes time. It's a long video. It takes time. Why do you ask? Because you want to go to sleep? It takes some time. It will most likely not happen for you tonight. It takes time. I don't know. All depends on the converting and uploading. I don't know. Maybe 2 hours, maybe 1, maybe 2, maybe 3 hours. All depends on the size of the file and everything. No idea. Okay, let's continue, guys. That is the Aussie dollar. Aussie franc. Okay, let's start from the long term. Long term, according to my beautiful triple cycle on the monthly, I want to go buys and buys only. Which means I want to see 2 waves down and attack them. Currently, the weekly does provide 2 waves down. Do we have a divergence there, by the way? Only a potential. And currently, it looks like a convergence even developing. So we don't know how it's going even to end on the MACD because it still did not tick to the upside. So we drop lower. According to the daily, do we have an action? So let's see what do we have here. That's our cycle. We're respecting the 100 level, which isn't really so relevant because this one took about 40 candles while this one took about 20 candles. Not so good. There is no divergence on this place, but there is divergence developing right here. It's a small divergence called continuing. Does that really enough for the long term? No. Therefore, the only action we can have is the fact that we are bouncing from the 100 level, the fact that we had a beautiful kicker with equal tails, this one, kicker with equal tails, you see, the green one, false break of the red, ending above the 50%, and equal tails on the top and on the bottom. So, and adding to that, because it's a short term, right? So on the short term, there must be a cycle on the 4-hour or the 1-hour. And this is exactly where we have that. That's the only place where we got ourselves the the cycle. We got Fallsbergs 1, 2. All right. The question is now that checking here. Do we have? No, we don't. There is no divergence even here. The only divergence again is here on the very bottom. Not really good situation. Therefore, Ose Frank still is bearish for us, which means in very simple, we want to see these rallies and we will want to go and sell them. The rallies could be into two waves or they could be in a range, provide us the sells. The only situation that here provided the buys is this. Regular divergence that turned to be a fake convergence. That's the only place where it makes it tradable for the short term. And then on the lower time frames, on the 1 hour or the 15 minutes, we need 3 waves up, 2 waves down. On the 1 hour chart, we currently don't have it. On the 15 minutes, we currently don't have it. Therefore, Ose Frank is, from my point of view, still untouchable. And ideally, still sell the rallies. Okay, that's all. Very simple. Very simple. Okay. Kicker. Kicker is when it's not turned to be full engulfing, basically. Yeah. Okay. That's a good question. Can we sell the 1 hour chart to waves? You answer that. You asked, you answer. You have a bullish divergence on the 4 hour, right? Which means that 2 waves have to be on the 4 hour or the 1 hour. Correct? That was the triple cycle here, which we just discussed about. So the levels you would want to go and find your action would be here. You get your double cycle there, you get yourself a possible trade. Yep. So that could be the 38 to 50 or the range, right? Currently this is the 2 waves developing. Correct? 100 is not in play. 161.8 would be in play. So we get in 161.8 because of the lens. Yeah, this is already much longer. We get it here. You get yourself trend line, and you get yourself a possible continuation. Yep. If we get the setup, it's definitely tradable. Is that yeah? You did not even reach the. You have the cycle, triple cycle. So you want to get yourself the closer correction. That's the double wave that you refer to. The divergence is there. That's the 100% Fibonacci of this double cycle correction. Is that correct? Ask yourself this question. This one is 15, 16 candles. This one is currently around 30 candles. Is that valid? Yes or no? Exactly. No. So the 100 is not in play. The next level to be in play is this. If you get it closer to this place, that's where you start looking for the breakouts. Ideally, it might even go and provide some better trend line there. The bottom line, currently you have no action. Okay? Again, always ask yourself these questions. The same question I ask you, I challenge you with. Same questions exactly. At the end of the cycle, you need 2 waves corrections or a range. That's all. Very simple, right? Once you get them completed and the conditions are with you, you have an action. Perfect. So that's for the Ose Frank, still bearish. We still want to sell the rallies. The higher they go, the closer to the 161.8. the better our cells would be. OZN, our cells completed. We reached the bottom of the range. We actually have one more false break here. So OZN, from my point of view, still remains bearish, because now we also have the format of lower lows, lower highs. Simply classical, if you ask me. That's for the weekly and the daily. On the 4-hour chart, we got a short cycle here, which means short-term corrections are acceptable or possible up to here. And from there, we are looking still to sell. So OZN sells. Sell the rallies. Okay. Yes, we expect the rallies. Yes, for those of you who want to trade only the short term, that means still we can trade the rallies. But the direction here for the long term is still sell. So it would be much safer to sell the rallies rather than try and buy them, right? That makes sense. And Aussie versus the Canadian, a pair that I myself still have no clear read, but prefer to the upside for one reason. There is no cycle that we can read. According to weekly, we are in the middle of nowhere. According to daily, we had triple-double formed and completed, which means game is over in terms of cycles. So the only way to trade that, as I said at the beginning, is to trade the short-term momentum. The short-term momentum is defined by the divergence. The last divergence, that's the last pressure. That's the last divergence we have here. This is a bullish hidden, which means on the 4-hour chart, we are looking for a bullish regular, basic, right? Which we got. And in that case, that means we can drop to even the 1-hour chart and get the trendline breakouts. The last trendline that was possible for us in that place is right here. And this is the only action zone that we got. That's all. Simple. Short term. For long term, I myself have no read for this pair. Currently the momentum was and remains bullish. That was the last divergence. That's all. Okay, that's for the Aussie CAD. But for the long term, it's completely neutral. I myself have no idea what's going to happen. And yet, as I said, for the short term, I will be looking for the buys actually. Trendline is there, bullish hidden is here. So short term still buys, and this is the invalidation currently. All right. That's the Aussie versus the CAD. Only on the short term for those of you who want to trade it. New Zealandians. Aussie Kiwi. How did we miss this one? Aussie Kiwi. According to the monthly and the weekly, we are only after the buys. We need 2 waves down on the daily or the 4-hour chart in order to start looking for the buys. Do we have 2 waves here? Yes, we do. 61.8 correction. Do we have the divergence there? We have a fake convergence situation here, which means we got a regular divergence, which turned to be a fake convergence. Which means we have the levels, we have the reasons, we are looking for the buys. On the 4-hour chart, that was a cycle that finished with a double bottom. Right? Basically. This should be a zone of 61.8, near that. Yeah, not too far from this area. Double bottom is holding. The 1-hour chart should be a cycle by itself for confirming that. That should be it, and also that should be around the 61.8. Yep, that is. So Aussie Kiwi, we are after buys. The fake convergence low is here, which means this is the invalidation area. The invalidation for the buys. So, okay. For the long term, we will still want to get these 2 waves broken, of course. It will be much safer. for the weekly direction. Currently we don't have it, so our trading is short term, which means we would want to see drops and we would want to see the buys, like we got on a Friday, for example, but we were neutral on the previous week. That's all. Simple for the Aussie Kiwi. No, Scorpio bearish conservative, but I don't see any reason to deal with it according to the cycles, to be honest. There is a good chance that what will happen here is this exactly. So that's where the Scorpio might do the job, and then the cycle which we want to trade will make the job right after. Because we need two waves and buy, right? That's exactly where the differences come into play. But for me, I prefer the buys, as I explained why. Okay, so now just need the setup. We have the level, the confirmation. Setup is missing. Setup was there, but it was Friday, so not really ideal for this kind of breakouts. All right, so that's for the Aussie Kiwi, and we are done with the Australians. New Zealandian dollar. We're still on the top of the weekly range, still bouncing from there, right? Expecting it to go lower. We have the 50% of this special cycle, which is here, bearish. It was bearish, it remains, which means we are looking to sell the rallies. Okay, so two waves up, and we are looking for the sells. New Zealandian franc, we were aiming the 0.67 from the previous week, the bottom of the daily range, and we almost reached it. It was a regular divergence turned to be a fake convergence, which basically means game is over. So the previous week we were bearish. Currently we are now in the bottom of the range. So New Zealand franc at this stage starts to be, for me, neutral. I see no reason for any action. And very likely we will start looking for possible retraces here and buys. But we are not there yet, so currently New Zealand franc remains bearish from my point of view. New Zealandian yen, which we were bearish on the previous week. Let's see, what do we have? Actually, I even didn't look on this pair yet today. So we are in the range here. We are in the range here. This is the triangle part of range. Daily cycle. What do we have on a daily? Double here, triple, and one leg forward. New Zealandian yen could be starting interesting for buys actually, or something like that. Before we sell. Yeah, New Zealand yen is very interesting scenario because we have no reason for the long-term buys, only for the short-term. It forms this, right? Which means that's what we should see and sell. So New Zealand yen on the short term, we would want to see the rallies, but on the long term, we would want to go and sell. Do we have the reasons to long it on the short term? Let's see, guys. This is the 4-hour chart. 100 is in play. We have 30 plus candles here, 30 plus candles here. It's good. And we have this cycle also creating for us the magnet on the same drop in. Yep, it's basically classical conditions. 1-hour chart, false breaks are in play, higher highs, no convergence, so we want to play that more conservative. which means this, right? So 1, 2, breakout, and we can expect a rally, and the 2 waves up here, and we start looking for the sells. The best places for sales, 75.50 up to 80. This trend line, of course. So if we can get ourselves closer to there, that would be our sells. Short term, acceptable for the rallies. Long term, we are after sells. According to the weekly range and the fact that we are in a bearish trend, lower highs, lower lows, makes it sell the rallies for the long term. And actually it starts to be interesting, much more interesting than it used to be on the previous week, for sure. And dollar pairs, dollar yen, according to weekly cycle, we are still in the range, believe it or not. Still holding, still fighting, right? Still holding, still fighting. So no action for us for the long term. We would want to see rallies here for sell. So long term is out of play. We are in the range. Short term, triple cycle, 1, 2, 3. False break are in play. 2 waves down. Well, we need to go and break the trend line. Break above the trend line will open the doors for the short term buys. Currently, both directions, clearly. Nothing into one direction. Both directions are in play. We have no reasons for specific action at this stage. So dollar yen only for short term and only for both. Dollar franc, we were after sells for the long term. Previous week we accepted the short term buys. We had them right here on the previous week scenario, on the triple double, and we had a lesson about it. It was here, sorry, 1, 2, 3, and the breakout. So now we can see that it looks like a extended triple, right? Which looks like ascending triple, which means there is still a good chance for that before the long-term sells, right? Again, why the long-term sells? According to weekly, no divergence, no levels, so we can go lower. According to daily, no divergence, so we should be looking to sell the rallies. We are forming here the bearish hidden divergence on a daily, and we yet don't have the divergence to confirm on the 4-hour. Therefore, long-term trading still is not really in play for us. The only thing that is in play for us is the possibility that this is turning to be ascending triple cycle, which means then we can go and get one more low and try to rally, and from there sells, which means dollar franc is currently on the short-term direction completely acceptable for both. For the long term, we still want to sell the rallies. So once and if we get the rallies, we will want to go and sell that. Dollar versus the Canadian was in the short-term momentum to the upside. The momentum is still on. We have no real reasons to stop that, to prevent that. Nothing that we can say actually even. Yeah, still nothing. Dollar CAD. So still correcting. Only for a short-term direction, the current momentum is even still bullish here for dollar CAD. No sales reason that I can see. No false breaks and convergency. That was one candle play. Did not change nothing. The convergence here is not in play. No 3 waves down. So dollar CAD only for a short term currently, and the short term is still bullish. So looking for retraces down to buy. And we are on the last pair for today. That's the CAD versus the franc. The pair that we have been shorting previous week on this trend line, and it reached the low. Now it has for us kind of a special triple cycle on the 1 hour chart. Wow, so ugly. No, nothing for the long term yet. We are still in the short term. No bullish divergence yet for buys for the CAD franc. So short term pressure is still bearish. By ideal, what we should get here is another false break, and then we would want it to start and building up for us higher highs to buy. Short term only, and it's still bearish for the CAD franc. Nothing else here. We are done with Forex, guys. Congratulations. And sorry it took a bit longer than maybe you expected, but at least we covered everything here. Gold, short term still bearish. For the long term, we still want to buy. We want to go and break the trend line. We currently don't have it, so the gold is short term still bearish. Long term, no action yet. Silver, same story. We want to go and to make the breakout. Actually, here we have divergence here. Yes, we do. Silver becomes bullish by breaking the trend line, the last trend line in play. And the only question we have open here for the silver is, will that turn to be a triple double? Because if it is, it means we will get one more low before the fly. It doesn't change much for us because we still want after buys, so silver becomes bullish. For the short term, we need two waves breakouts with this invalidation. And for the long term, of course, we're still in the bottom of the range of the daily, which means buys big time, and aim all the way up to 1850. So bullish for the silver. Oil, which started and became bearish on the previous week after breaking the new lows, bearish for us. So we want for long term sell the rallies. For the short term, we are building here a special cycle. The way it looks. So the special cycle might go and form around the level of 261.8, which actually is crossing it right now, is dancing around it right now. So this is the area where we most likely would see the oil stopping for the short term and presenting the correction. But the bottom line for us, oil is sell rallies. Natural gas, we are looking for the trade here. We still did not get any kind of setups. We got two waves. We are building up a potential bullish divergence for the natural gas. The daily cycle starts to form, double cycle down. No divergence clearly created on the histogram yet. Moving average still in potential. Not finals though. 4 hour chart, still no false breaks. Still no higher highs. Bottom line for natural gas, no action currently, not long term, not short term. It is on the neutral zone. And the one that we have had enjoying from the last week, from 2 weeks ago, sorry, that's the corn, and it's moving pretty beautifully now, approaching to the 100, very close to that. That starts to be a great place to cash out. We also have the divergences against us, so get out of the corn for the short term, guys. That's a trade we are running from the previous 2 weeks. Indices: Dow Jones, Nasdaq, FTSE, and of course my favorite, the DAX. We want the rallies. Remember what I told you previous week, guys? Don't get fooled by this trend line. Remember? You see now why? it would easily fail. So don't get fooled by these trend lines. After one leg vertical move, many times the corrections are longer, which means there is a wonderful chance we are going to dance into something like that here. Perfect chance for that. You want to deal with short-term action? No problem. Build yourself short-term cycles. Once you get the short-term cycles, you can short-term trading. For the long-term, wait for the clearer setups. Okay, you see that? That's cycles, intraday cycles. That's where you will want to trade if you get yourself the connections there. For long-term, no reasons yet to trade. Our long-term direction is bearish for all of them versus this top, which means we want to sell the rallies. But we want to get the rallies. 2 waves up or a range. The 2 waves up for this bring us to classical situation. The 61.8, which cannot be higher in that case, and the 100. Well, this is the zone number 1. This is the zone number 2, where we should get the indices done. And that will be the same pattern for everything. And that's where the question comes in. Are we going for this or are we going for this? I bet on option number 2. I might be wrong. For us, for long term, 2 waves or range on a daily or the 4-hour. We don't have it currently, so the action could be only on the short term. And that's same for every one of them. Same cycles, same idea of the range, false break and possibly another false break. Okay? Long term, sell the rallies. Short term, still no action. And of course, the German DAX is the same. After this convergence, we are after sales. We need 2 waves up on the daily or the 4-hour chart. We currently have none. So the long term, there is no action yet. Okay, only short term. Okay, that's for the indices and cryptos. For cryptos, I'll make it very simple. Very simple. On last Wednesday or Thursday, when it was there, we, after the break of the trend lines, for all of them, Ripple, Bitcoin, Ethereum, Litecoin, every one of them, we are after buys with invalidations for all of them versus the last lows. This scenario did not change. It is exactly the same for all of them. We are bullish versus the last lows, which means every 2 waves down to be created, like here, are buys. All the ones that you have on the list. Okay? Everything. They all the same. The bottom line. Once we broke these trend lines, we are bullish. Which means every 2 wave cycles, we are after buys. Here, the angle here is a bit problematic. Every 2 waves down, we are into buys. Enjoy the momentum that is available on cryptos. It's there, it's moving. It's funny to think about it, but many times I see in the chats, why it's not moving? Suddenly 10% moves becomes boring because we used to 200 or 300 or 500 or 1000 pips per percentages per day, right? It's funny, but that's the reality, and just want you to remember the big picture, guys. It's not about making $1 million or the next or a call of the next bitcoins. It's not going to happen. Forget about it, because the entire world is trying right now. That means it's not going to happen. Fact. So the best thing you can do is to enjoy the momentum. Invest in those that, in the technologies, definitely, 100%. but that's for the very, very long term. And the best thing you can do for yourself on the short term is enjoy the momentum. It was a bearish momentum for us 2 weeks ago, which we were bearish in, and it is a bullish momentum right now. Enjoy that. For your question, Trin, the Bitcoin is bullish as long as it holds this low from the daily, which means, as I said, every 2 waves down we get, like here, like here, like here, like here. I can continue, right? You are trying to join the daily direction, right? So the 2 waves have to be on the 4-hour or the 1 hour. That's your opportunities, and that's where you get yourself the chances. That's where you get yourself the risk rewards. That's all. Okay? Every 2 waves down, that's where the buy comes into play. Okay? That's all for today, guys. It was a long session. Thank you for surviving. Thank you for staying around and listening to all. I hope you take your notes. Of course, I'm going to share with you the recording and the report once it's ready. I wish you a wonderful week. Marcy, for your question, when do you use the strategies? It could be Scorpio or anything. The idea of the live rooms, and that's why I asked you before at the beginning, watch this video here on the report, because we design the directions. Once you have the direction, short term, long term, you have the directions to trade with whatever the system you use. I don't care what system you use. It could be any of mine, it could be any of your own. I don't care. What I care about is to try and teach you how do and why do I choose my directions the way I choose, because choosing the directions simply improving your chance to end up into profits. Okay, just watch this video please, so it will be a bit clearer. It's all very, very important, guys. Choose a direction, trade the direction. What strategy you use, I don't care. We have many, thanks God, and you have many, thanks God, and you can just go and enjoy them. Everyone with his or her own strategy or strategies combination. And I always suggest diversification, simply because you can enjoy from more opportunities. That's all. Thank you very much for being here, guys. I really appreciate that, and thank you for holding the entire session. Really appreciate that. I wish you a wonderful week. I'll see you in the Telegram groups later on, and I will share with you the video and the report once they are ready. Take care and a wonderful week to all.